Hey, Andrew Falde here with Edge Navigator and an exciting announcement about the new tool called Behavior Profile. And this is a quick look at what the report looks like and a walkthrough of what you see when you pull up the report. So first thing is the symbol that we're using a behavior profile and on a daily time frame, and we're currently in the beta mode. So we first talk about the current behavior profile, and that is with NVIDIA. It's short-term buying pressure within a generally bearish move in the upper part of the long-term range. So when that setup occurs, when that is the behavior of the stock, the historically aligned model is given right here. So we look through all past examples of that specific behavior and we model that and we find the appropriate trade for that. So across the top are 5 key performance indicators that we can land on and make decisions from, or at least have a general sense of the expectation and performance of the stock from this point. So first we have the return, and these are given in R, which is the unit of risk. So wherever the stop is placed equals your unit of risk, and then you can use multiples of that for all your math. So it's risk adjusted sizing, volatility adjusted sizing as well on the stop losses. So 0.73 R average return per trade in this specific setup. Also right here, I kind of jumped over this, so I'll come back to it. The actual setup, the actual trade modeled is along anywhere within this lightly shaded area. You can see the target being the current price. So as of modeling the price, we put this on there. Currently the market is up a little bit. That's a short-term response to what's going on. So not trying to cherry pick or anything. I'm just pulling this as of yesterday's close. We're in the middle of today, and yes, the market's up, but that's not the reason for running this. The long and entry zone is given right here. We model it from the current price available as of the time of the report, and we use a 2 ATR stop and 5 ATR limit, which is what we test. We test what types, what direction, long or short, and secondly, should it be an asymmetric reward? Should it be a wide stop, wide limit, narrow on both, narrow limit, wide stop, etc. So those are what are modeled very simple. So then you get in here the stats, 0.73R, drawdown. This is the historic average drawdown depth from a prior equity high. At the bottom of the report is an equity curve we'll look at. I'll just scroll down there so you see it. So here's the kind of just off screen a little bit there, but the equity curve, so it's showing the average depth of a drawdown is that 6.49 R, 6.49 units of risk, or the equivalent of your stop being hit 6.5 times cumulative. So you may even have some wins in there, but the cumulative result of the average drawdown is at 6.5 R. Efficiency, so sometimes you can have a great R, you can have a low drawdown in R, but your absolute return on the capital you tie up is not very good. So in this case, we want to look at efficiency. Is the juice worth the squeeze? And in this case, 5.5, a little over 5.5% per trade, which is above what you would see in typically an ETF or a slower moving stock. Consistency is a measure we use rather than just raw win rate, because you could have a few stop losses and then 2 winning hits, or even a couple of stop losses and 1 win, and be ahead. So you'd have 2 losses, 1 win. You'd technically have a less than 50% win rate on that scenario, but you would still be ahead on just a 3 trade cycle. Also, stops that are a little bit closer to the market are shorter lived trades. You're in them for less time. So it could be even over the course of time, you're still generally profitable most of the time. So we use a consistency metric called the 10-day rolling success rate. So it's basically looking through all the trades, and as you accumulate 10 trades, how often are you profitable on that 10th trade? And in this case, it's 81%. It's a better metric for consistency than this, the actual hit rate per trade, which is 49%, and is given to you right there. And evidence, how many times did we spot this model, run this specific scenario to generate this result? And we have 120 trades in the sample size. All right, so underneath that, you get the quick chart with the stop and limit shown, the actual levels given here in a legend, and this range that's valid for entry. Obviously, the farther you get below it, The model can change because the actual behavior state is modified, and so you would have a different result. But anywhere near here is good, but dropping down a little bit really just gives you a better price on that original probability. All right, then this is the really cool part. I think it's pretty cool. It actually goes back and selects evenly distributed in reverse chronological order, so the most recent first, and then jumps back through time to show you side by side some wins and losses. So how do these take shape? What do they look like? And not that everyone's going to be the same, but you can see in general the pattern. So you see here this kind of sideways, a little bit bearish market, sideways, a little bit bearish market, short term, a little bit of strength, and then we see the follow through. So we see generally bearish market, a little bit of strength, and we see a stop loss. All right. So side by side, a very balanced approach, and you can see the R generated on each trade. So this one's 2.5 R or 15% returns. You see that's where that faster moving symbol, the underlying symbol on the trade, matters. That makes a big difference. You could have the same pattern show up in IWM or SPY, and it would be 3.2% on a move that looked like that. So again, is the juice worth the squeeze? We can see that in the individual trades. It also works on the other side. You're going to have larger losses on the percent basis as well. So just keep that in mind for your sizing. All right, so here's, again, win example here. Back in 2024, a loss in 2024, a win in 2023, a loss in 2023. And these are evenly distributed. They're not cherry picking the fastest, easiest one like this. It's underneath, it goes up. It's back to break even, it goes up. So generally those long trades, it's long for a reason, takes a little bit longer on those as well. I'm going to see if I can shift this down. I can't. I'm going to move something up so you can see it better. All right, here we go. I had to shift the screen a little bit so you can see. Below all that, we have an equity curve. So here's those trades that we modeled, set up here. And so that's if you had taken those actual setups historically. You can get the visual graph of what those look like. And you see a nice stair-stepping pattern in sizing, and that's the benefit of using R for volatility adjusted sizing. So based on volatility, setting our 1 unit of risk at that ATR stop allows us to be consistent in our returns per trade, both on the downside and upside, and a few more stats here. All right, so this is version number 1 of the Edge Navigator behavior profile. That's in development, not yet available, depending on when you're watching this. But I wanted to share it with you because it's very powerful, very exciting. And the intent is that you will be able to type in a symbol, and right at that given moment, right now it's going to be the close of the previous bar, and then we're going to move to live data. But as of that available data, not what could you do if something else changes, or if and then, or if you have to wait for a signal. It's right there, right then. What is the best chance? Not the best chance, but really the best setup for the stock. And that works if you have no position or if you have a position. Because as the stock progresses through its cycles, things change, the expectancy changes, the appropriate stop placement changes. So even an existing open trade, you can start to see where moving stops as it progresses. Ideally not farther away than where you started, but with the direction that's winning for you. So if you're holding a winner and you come in and check and you see appropriate stop placement, or you start to see that the odds are not really in your favor, or are at least not favorable, not attractive, then we can know, hey, we can lighten up on size, or we can take some sort of options trade to reduce our risk directionally in that trade. All right. That's that. One last little note too is I have some benchmarks in place that allow these boxes to turn green. So those I'm going to document and share with you what levels each of those have to hit. But you'll see as you type symbols in, many of those will not be green. Many of them will not be green in the future. This was just a good setup on a fast-moving stock that produces opportunities historically. So it's usually going to have 3, 4, or all 5 with a green outline, but many times we'll have a couple that are not. So either the consistency is not high enough, the number of setups is kind of rare, so you wouldn't have enough trades historically to back the stats there, and so that would lose its green outline, its green indicator on that. Or if the drawdown is larger, And so it's really not worth the average drawdown that you have to live through in order to get the return on that trade. So all of those things will be updated as you are able to use the tool. All right? So keep looking for updates on the Edge Navigator behavior profile. Also, generally the terminology being behavior modeling. So we look at the behavior and we model trades that can be taken or maybe should just be ignored, which is also going to be very helpful as well. All right, if you have any feedback or questions, I look forward to hearing those. You can contact me through edgenavigator.com or reply to any emails you receive. All right, thank you, and I look forward to getting this into your hands soon.